Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, everyone. Ira Epstein of Linn Associates with your financial market wrap-up for this snowy, and it is snowy in Chicago, a snowy Tuesday, the 14th of March, 2017. All right, tomorrow's FOMC day. We also get Miss Yellen. We have a lot of reports coming out in the morning in addition. You just got everything. Late in the day today, and this is not wrong information, you had a big rally in the crude because we saw actual reductions, or let me put this the right way, such a small build compared to what people were looking for that became the question. And people are going to ask themselves, is this the beginning of the end of those big imports that were coming from the Mideast to the U.S.? Remember, we had builds of 11 million. Well, that was the issue, and now we're getting under 1 million barrels, and that was very important. So we're looking at all the energies getting a bid, and that's questions that are going to have to be answered. At the other end of the spectrum of impacting it in the other financial markets, the Saudis got fed up, as I'm viewing it, and they increased their production by a third. Now, what that's really saying is to everybody, get yourselves on board. Russians, I don't want to hear your problems. Here we are in March. You've always said that you're going to be at your 300,000 barrels. Where is it? What about the other countries within OPEC? Everybody's got an excuse. They're not doing it. And this is what we expected to happen. We expected everybody to drag their feet, make as much money as they can. And as usual with OPEC, nothing is easy. And I'm not sure this deal can work. We'll see what happens. In any case, metal markets are still down as the dollar is strong, stock market stable. But as I've used this week, that term, running out of gas. Now, you may not believe that when you look at a weekly chart, but I don't think you disagree with me that for the past 3 weeks, we've really not gone anywhere in it. And that's my definition that it ran out of gas. That's not to say that it can't base here and go up again. What I am saying is that this whole area, as you can see, has really narrowed in and gone nowhere for a bit. Since we got up on a close to 53.97 coming from 48.54 at the beginning of the year, we've drifted back, but not by much. Come on. You're at 53.85.50, and that's not a pullback. That's hanging right there. But look at how the market just hung in this area, and that's my definition of running out of gas, and you see that on this chart. Now, should we take out, and this is important, I want to go to it. Yesterday's high, this is Monday, was 5,400. We got just over it today at 5,450, had an outside day down. It doesn't matter to me if it does it by one tick, if it wants to do it by $10. Once it's over that, it's an outside day down. If you take out the high of an outside day down, it often sets up what's called a trap. And in this case, it would be a bear trap because the market had taken out Monday's high and low and closed lower. So the question is, where might that market go if that trap gets sprung? So that's one thing I look at. The next thing I look at is, do we have a pattern of a trend? Now, if you're trending, you normally have higher highs, higher lows, or in a downtrend, lower highs, lower lows. You have neither of that. You have a lower low and a higher high. I call that nothing. When I take a look at where potential support is, it might come in at the 18-day average of closes. That is the area the market found support at before. Far away from that's the 100-day. Get down there and everybody will say the market made a trading top, blah, blah, blah. Who knows? What about potential resistance? That's the problem. If you take out the 5,400.50, just 4 points above it's the upper Bollinger Band. And notice how the Bollinger Bands have gone and gotten very narrow here and just drifting sideways. When I look at market momentum, though, with the action we're getting right now, if the market were to finish like this, you've got both the K and D lines, the red and the blue, both over 50 today, over 80 today. They were over 80 on Tuesday, and they were both over 80 on Monday. Friday, They were not. So what you really have to have here is the action today define if you're going to get the embedded reading or not. So you're forced to wait for the latter part of the day to know that right now. That's all that I can say. So pretty neutral market going into the report. You don't have anything like that in the June E-mini S&P. As you can see, this market is drifting down with momentum. You've got a pattern of lower highs, lower lows from that, and you're just stuck at the 18-day average. And again, your Bollinger Bands, which are your theoretical support and resistance points, they're going sideways on you right now. What about the Dow? Same type of thing. Here you got higher lows but lower highs. So I don't call that a real trend. Look at how you're stuck at this 18-day average. What do I call the 18-day average? The line in the sand. What else is it? It's the resting point. It's the point at which I teach in my charting course. Markets often look to see where can they launch from. That might well be the point. Then I go to the Russell 2000. Lower highs, lower lows. The market is oversold, not embedding at this point, and resting on a support area. Okay, but this is the downtrend market, and I think I've been crystal clear saying this is the lost child, so to speak, the weakest of all the indices. We then get to the VIX, and why should today be different than any other day? Once again, you keep hitting this, the 18-day average of closes day after day, stuck within this band. Upper resistance, 1281, the 100-day average, 1274, the upper Bollinger Band. Remember, upper and lower Bollinger Bands give you, from that algorithm, an idea of resistance and support, and that's the key to them. In the bond market, you are pushing the lower bonds, the Bollinger Bands down. The market has got an embedded reading right now, and the trend is down. Everything is still bearish. To lose that bearishness, the red line, the K line, has to close over 20, and if that occurs, it often leads to price and the 18-day average coming together. On the June 10-year notes, it is the same. In fact, the 5-year is the same way. Lower highs, lower lows, staying to the right-hand side of the Bollinger Band with an embedded reading. Key to embedded readings on slow stochastics is to get embedded, which means locked into a trend. If it's to the downside, you first have to be oversold and then go sideways for several days, under 20 to embed. In the dollar index, momentum has turned flat. The market is stuck against, for all purposes, the 18-day average of closes in a narrow Bollinger Band, waiting on a catalyst to decide further down or up. The trend going home in this market, swing line down, prices over the 18-day average neutral, and momentum neutral. In the June euro currency, support is back at the 18-day average of closes, the red line. The pattern is one of higher lows, higher highs in a market that has corrected an overbought condition when it got up to the upper Bollinger Band and the 100-day average. It is still very much in an uptrend. The risk is rather substantial from where you could buy it at the 18-day average onto the recent low. But I don't know if the traders are going to do anything until they see the FOMC announcement. In the British pound, the trend is down with an embedded reading. Lower highs, lower lows, went to the right-hand side of the Bollinger Band. Support still back there at 120.81. Here you are down tonight 12 points. Japanese yen. The yen has an opportunity here to try to figure out which way next. If it gets over right through here, the 77 level, you got to be careful here. Did I say 77? 87.71. I read it wrong. It looked like a zero. If it gets over 87.71, you could end up with a pattern of higher lows, higher highs into the 18-day average of closes. But to get bullish, you got to close over 88.30. Barring that, this market is trying to determine right now, should it have an embedded reading? And if you look at that, it does. So now the question is, what does it do with it? And that's what we have to wait and find out. Crude oil, what did I say the other day? The market had 5 days in a row under the lower Bollinger Band. But the reality is, once the API came out, the market saw it go up here. 5 is really pushing it to the downside. Now, there's a negative and a positive here. All you're doing is going to the right-hand side of the Bollinger Band. There's nothing bullish on this chart. It's looking more and more like you're going to embed. And I got to tell you, folks, If the Saudis get frustrated and they stop the production cuts, the game is over. Why should they go on in June if they can't get the basics in place, which is everybody's to be in place in the month of March, not 85% compliance, 100%. And they're showing their frustration. That's how I view what's going on. But we're going to get forces that fight each other because the imports coming into the U.S. should be less. It takes about 90 days to pump the oil in the Mideast, put it on a tanker, and get it to us. So this is the time frame for that. So we're liable to see at this point in time less oil builds coming in, and the question is what's that going to mean in the long term? So you got a real complicated case here and a market that is trying to show itself into a downtrend. Now let me give you something that's a warning sign. I want you to look at the high of Tuesday. Remember, we're in Wednesday's trade. It was 48.79. Tonight you're at 48.87. You've already sprung what I call the bear trap. You've taken out the high. When that occurs, prices often make a run back to the 18-day average of closes. Countering it is the fact that you're developing, as you can see, this embedded reading. The embedded reading goes back through Friday, so you got Friday as day one, Monday, Tuesday. You already have it. Today's just the icing on the cake, and the rallies will most likely get sold by the pros until that red line shows that it's going to get back up and over 20. In the gasoline market, you had an outside day down. You've already taken that out. You're still over the upper Bollinger Band with an embedded reading. The same problem I'm having. In other words, even though you got the embedded reading, taking out that high tells me that the market's got a shot to make a run to the upside. The question is, does this overcome that run? I don't see a bargain in selling it right in these areas because of that, and there's no reason to buy it. So I'm sort of caught, even with the embedded reading, wondering what to do. I want to remind you about my market research, and this is just so important to everybody. My market research includes what I write, and I write a report in the morning at 11:30, typically Central Time, and another one before 8 p.m., normally Central Time. With it, when I put out the updates, I also put out an oral one. We have a lot of people that want to hear what I say in one way, and I do that via phone, and it calls them in the continental U.S. It does not call out of the continental U.S. In addition, I get in the morning, sit down. I get here early. I wake up like today. I got up at 4:30 in the morning. I'm tired today with it all. But I then create a recording. I sit at my desk and I record 40 charts. I go through them and I give you ideas for buying and selling, even away from what I wrote, because by that time in the morning you've had the evening of trading, and I'm trying to give you ideas as to what the pros may or may not do based on my knowledge, giving you ideas where the stops would be, what you can buy. And the whole idea of this is not, am I right or wrong? Can I throw an idea at you that you might have had already some idea about? You need somebody as a sounding board, that you want to hear them say what it is. I've been at this 45 years. You think I didn't have sounding boards? I had many of them. I loved it. And I think that what I love, people still do. Call us. You can go to our website. You'll see a carousel of free offers for this. You can click right up here if you're watching me on YouTube. A form will appear when you click that I. Fill out the form for the free offers you want. Same thing here underneath us on many websites. It says, click here, do so, the form will appear there. With all that, I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow.